everyone. So one of the stocks that I own, one of the larger positions, just announced a dividend increase. I invest for dividends that I use to pay my bills. And so I'm excited to see, like, hey, was this a big increase? The company I'm talking about is the Home Depot. So I have my bucket here. This is the one I use to wash my car wheels with. I actually wrote that on the front of the bucket to remind myself. But here's the deal. Let's just see what is in here. What's in this bucket today? Oh, it's a quarter. Last year when I went in this bucket, it was a lot more money. And so if you heard the news, the Home Depot did a dividend increase. It was 2.2%. It was lackluster as compared to recent years. And so I want to talk about this case study today because a lot of people are talking. They're talking about, hey, the stock market, is it starting to correct or even crash? People are talking about this. I want to use the example of just the Home Depot to kind of explore that question and also share my experience as a dividend investor. So, hey, Home Depot, only 2.2% dividend increase. I got my Ryobi tool behind me. I guess I'm going to be doing a lot more DIY because I'm going to have to do it myself to save some money here. And so anyway, let's look at this. Why was the dividend increase so small? Well, check it out on the screen. What you can see here are the earnings that they just shared. They shared their Q4 earnings and their fiscal 2024 earnings. The numbers on there are difficult, if you will, to interpret. I had to do a little math to kind of get to the bottom of those numbers. So here's what I'm going to do. I simplified it for all of you in this slide. So check it out in front of you right now. Here's the slide that I prepared. And this is what the Home Depot is basically saying in the earnings report. As far as Q4 goes, they're saying comparable sales grew 0.8% year over year. They're saying that the comparable adjusted diluted earnings per share did not grow. It decreased by 1% year over year. And so now let's look more importantly at the entire year. How did fiscal 24 do versus 23? Well, sales decreased 1.8% and the adjusted diluted earnings per share actually, it was kind of flat, but it was down 1 penny. Not so bad. It was kind of flat. What they're saying is, hey, there's uncertain macroeconomic conditions right now. They're also giving guidance for fiscal 2025. They're saying sales will probably grow about 1%, but they're saying adjusted diluted EPS, it's going to decline again, approximately 2%. So we look at this and we understand why the dividend did not grow much. I've become accustomed to large dividend increases from the Home Depot over time. And so this year, I was hoping for a large increase, but I also know the underlying fundamentals, that's what drives the ability for them to increase the dividend. I think management probably did the right thing here with a small increase because the fundamentals do not warrant more at this time. Now, I'm still a long-term investor in the Home Depot, and I invest in companies for long periods of time. And I realize that companies go through different cycles. They go through cycles of growth, rapid growth. Sometimes they plateau, sometimes they decline, and then they get on a journey of growth again. Companies go through cycles. We're seeing it before our eyes right now that the Home Depot is going through a bit of a plateau, if not a slight decline in the fundamentals. And is this a barometer, if you will, for the overall economy? And if it is a barometer for the overall economy, could this be why people are concerned about a possible stock market crash or a large correction? Hey, I think that is an interesting line of thought. But let's keep going. I have some metrics I want to share that really share the insights that I've learned over the years investing in this stock. As you can see on the screen, I have a spreadsheet. I prepared a lot of numbers today. But what I want to do is first go back to the beginning. Back in 2014, that's when I started buying the Home Depot. Today, I don't want to share just my first tranche, but I want to share the first 6. because a lot of subscribers have written in and said, hey, Ian, first tranche, that's nice and everything, but we need a little more to go on. So I have the first 6. These are all from 2014, and this actually was a good amount of my total shares that I have in the Home Depot. I put a good amount of money forth there in 2014. My average, simple average here, is just $78.94. This off the bat shows the power of long-term investing because, hey, we're now just about 10, 11 years out from there, and the stock is at $392. So from a capital appreciation standpoint, I've done quite well. But look, I don't invest for capital appreciation. It's just the icing on the cake. But what the capital appreciation does tell me is the stock has gone up over time because the fundamentals have gone up over time. Yes, we're hitting a cycle here where the stock is plateauing, the results are plateauing a bit. But when I look back in time at the last decade or so, boy, the stock has done well because the fundamentals have done well. But let's keep going. As you can see on the screen in front of you right now, back in the day when I bought the Home Depot, they were paying dividends. You can see this at the top of the screen on the right. They were paying 47 cents a quarter or $1.88 per share per year. Starting yield back then, if I just take that $1.88, I divide by my simple average of those early tranches, $78.94, I get 2.38%. What's interesting is the starting yield back then was not so dissimilar from the starting yield now, which is 2.35%. And this is another reminder, as dividend growth investors, sometimes the starting yield is not what matters so much, but it's the ability of the company to grow the dividend over long periods of time. That's just what they've done over the last 10 or so years. Let's keep going. As you can see on the screen in front of you right now, I want to share a few more stats. There's a lot to look at here. So let's just look actually at the dividend increase history. If we look kind of towards the right of the screen below the 2014 dividends, I have a little table that says dividend increase history. We all know the last increase was 2.2%, as I kind of joked about in the intro today. But look, I have much respect for the Home Depot. I know it's not always going to be that low. It may be for a while. They're facing kind of a plateau here, as possibly as the overall economy, but or at least certain sectors of the economy. But let's look back. The prior increase was 7.66. Before that, it was 10%. The year before that was 15%. Year before that, 10%. And so clearly the dividend growth has slowed a little bit in the last 2 years, especially this 2025 increase of only 2.2%. Again, the story I want to share is companies go through cycles. Markets, economies go through cycles. Is our overall economy right now, at least certain sectors, going through a cycle? Home Depot is sharing in their earnings report as they look forward that there are some macroeconomic headwinds that they are facing. I got some more analysis. Check it out on the screen. So what I want to do now, let's just look. Where is this thing right now? Where is it? It's at $392. It's 11% off the 52-week high. It's trading at a pretty expensive PE, to be honest. Even when I look at the forward analyst estimates for 2025 and 2026, I'm getting a PE forward this year of 25.94, forward next year of 23.59. This is really indicative of how the market, I don't think it's always efficient. If you asked me, do I think Home Depot right now, am I buying? Is it a value? Am I excited about it to buy more here for my personal stake? I'm reinvesting dividends because it's just that kind of core stock, but I'm not buying net new shares here because I think it's probably overvalued given their lack of growth that we can foresee in the next few years. They're facing a plateau. This is going to be a slow period probably for Home Depot before they resume growth. I have confidence in that in the long run, but right now it's a little bit slower, as is it for a lot of companies out there. But this just shows me, people are asking, Ian, are we facing a correction? Are we going to face a crash? Well, sometimes if you see stocks, you look at you take it from a macro level to a micro level. We just look at stocks and we start looking at really popular kind of bellwether stocks like Home Depot, and they look kind of really overvalued, that's not really a great sign just for the market. Yeah, the market could crash here a bit because it looks overvalued. Now, this doesn't affect all sectors. By contrast, Alphabet, a stock I'm buying, the forward PE now, it's like a 17 or so, 17, 18. And the company's growing pretty rapidly. They're not facing the kind of challenges as the Home Depot. They're facing other challenges in their business, but not the same kind of challenges. I don't see them facing growth challenges in the short run. But let's keep going. As you can see on the screen right now, let's just look at dividend yield on cost. So right now, starting yield is 2.35%. I highlight some of these key metrics in yellow because obviously there's a lot going on in this screen right now. Now, payout ratio, I think that's really important. Why did they increase the dividend by only 2.2%? I think they're trying to keep that payout ratio around 60% and not much higher. They don't want to get too high. I think that's prudent management, and I think the board of directors made the right choice here, not increasing the dividend too much, because I don't want to see their payout ratio too much above 60%, so I feel okay about that. Now, the 5-year dividend growth rate on average per year has been 8.9%, and it's slowing. Clearly, it's slowing because of the last 2 increases. Now, what I do want to share, and this is kind of the high-level takeaway, is markets go through cycles. There's ups and downs. Home Depot, I kind of timed it right. I bought at the earlier stages of a growth cycle. Right now, it's not the same probably for the next few years. Eventually, they probably will have another growth cycle, but I don't see that happening at this time in the next few years. But let's see, how was I rewarded as a dividend investor just for hanging in there? Check it out on the screen. So the way I was rewarded was through yield on cost. And when I look at the current dividend, what is it? Per year right now? Well, it's $9.20 when I add up, the 4 quarterly dividends. Well, if I take that $9.20 and I divide by my simple average on those first 6 tranches, which was $78.94, my simple yield on cost, not including reinvestment, it's now 11.7%. That is a staggering yield on cost for just about 10 or so years in this position. And so that's the power of long-term dividend growth investing. But if I were establishing my position right now in Home Depot, do I think that's going to happen in the next 10 years? Probably not quite as good, but I do foresee at some point in the future that the stock will resume growth. The company fundamentals will resume growth. But let's keep going. As you can see in front of you right now, some people have written in and kind of said, hey, Ian, I know this is all great and you're sharing all these things about dividend investing that show the power of yield on cost. But Ian, 2014, it was so long ago. Please, let's look at some more recent data. Okay, well, I made a purchase of the Home Depot during the pandemic era when it was tanking. This was in 2020. I bought it $148.70. My simple yield on cost for the 2020 tranche, as you can see on the screen, it's highlighted in yellow, it was 6.19%. And so the takeaway from this particular metric is just, hey, I like to wait for buying opportunities. I like to wait when there are market crashes, there are market corrections, because I know Home Depot is a solid company. And yes, the company itself will go through cycles. The economy itself will go through cycles. When I choose the right companies over long periods of time, they tend to reward me. But I like to buy them when they're on sale. Is the Home Depot on sale right now? No, not at a forward PE in the mid-20s. Would it be on sale if the forward PE got down to like maybe a 15, if the market crashed like it did during the pandemic era when I was buying almost every day? Yeah, it would be. And so, look, I don't know if the market is going to correct further from here, but I'm kind of waiting patiently to see some value out there. And while I'm waiting, I'm averaging into different positions. My patrons know this. I'm going to link in the pinned comment below to my Patreon. But I even mentioned one of the positions, Alphabet. I see value there right now, and the value keeps increasing because that one's been going down in share price, which I love to see. But could we have a broad-based correction from here? possibly because there are positions out there like the Home Depot that don't have the best short-term prospects. They're trading pretty aggressively in terms of valuation. But I have some thoughts overall, and I got them on the whiteboard over here. So I want to share some overall just lessons learned as a dividend stock investor. Business growth, it's not linear. Businesses do not just grow sequentially quarter over quarter forever. There's some rare cases like Equinix, which is a stock on my watch list. I've shared this one before. Yeah, that one, that one actually I think holds the record for sequential quarterly revenue growth over time. But most companies, they go through cycles. And so I just have to remind myself of that, as does the overall stock market. What is another lesson? Businesses, I've shared this a lot, so I don't want to spend too much time, but they face rapid periods of growth. They face periods of plateau or decline, phases of growth again. As a long-term investor, if I want true yield on cost, it's not easy. It's not always going to be a period of growth. It involves my strategy, and I share that next, iconic companies. I want to buy those iconic companies like the Home Depot that I can hold on to for decades. And I know during those decades, the business, it's not going to grow linearly. There's going to be periods that are challenging to hold on. And but what I need to do as a macro level is make sure I'm investing in the right businesses. And the right businesses, in my opinion, they need to be able to outlast bad management. I'm sure all of us in our portfolios at one time or another owned or continue to own a stock that temporarily has some bad management. The best businesses, they can survive bad management. I don't think Home Depot is one of those, by the way. They have good management. They need to outlast and thrive even in bad economies, or at least maintain. I think Home Depot is going to keep maintaining in this economy, even though it's not the best economy. I think that's why people are so concerned about a possible crash. These companies, they need to outlast changes in consumer behavior. They need to evolve. They need to innovate. And so those are the types of companies I like to invest in because I can sleep well at night knowing even if they're in a period of plateau, even if the economy is crashing over decades, they're going to be fine. And so that's another lesson learned. Other lessons is true yield on cost. It takes time. If this were easy, everyone would do it. If this were easy, everyone would have these success stories. I'm sharing like a good example today with the Home Depot. I have other stocks. They haven't done as well as this, of course. I'm sharing one of my better yield on cost stocks. And it's not easy. It takes decades to get the true yield on cost. Again, if it were really easy, everyone would have these stories about great yield on cost. And the hardest part of the investing, it's not only selecting the stocks, but it's sticking in the game for the long term, even when times are tough. So interesting lesson. Another lesson is I'm not really concerned. I'm not about the 2.2% dividend growth on the Home Depot. I'm actually pleased with it. I think management did the right thing. I would rather have slow dividend growth than a possible dividend cut in the future. So I think they did the right thing. Another example or takeaway I want to share today, lesson, is that diversification is key right now, more than anything, because we know no business has linear growth. If I had all my eggs in one basket with the Home Depot, it would be kind of sad because I'd be like, hey, I got slow dividend growth. But I have other companies that just increase the dividend a lot. One of them is Coca-Cola. Another one is Walmart. I shared those in my last video, which I'll link to in the pinned comment below. They had great dividend growth. They can make up for what the Home Depot is lacking right now. And so diversification is key. And with all of that, I want to share just a comparable story, another story. And maybe this helps shed just a little bit of light on where the market's at right now and where the Home Depot is, using this as an example for kind of our economy. Check it out on the screen. So Walmart, I've talked about Walmart a bit lately. I bought Walmart originally in 2009. And this was probably a pretty bad time to buy it because it was flat. Essentially, between 2009 and 2015, it didn't really go up too much. And so when I bought Walmart in 2009, it was at $16.60. In 2015, after it dipped a bit, it was only at $19, only up just a little bit over all of those years. And so the reason I'm sharing this is I bought Walmart kind of like if I were to buy Home Depot, or at least the dividends I'm reinvesting in Home Depot right now, I bought it kind of at the beginning of a plateau, if you will. And yes, it went up over that time and then back down, but it was kind of flat over those 5 or 6 years between 2009, 2015. And I stuck with it through the plateau because I knew it had the key factors. It had the management, it had the iconic brand, it had the defensible business, the moat. I knew it was going to plateau. It had a plateau, but eventually I knew it would grow again. And boy, did it ever grow. I don't want to spend too much time on Walmart because I did in recent video that I'll link to in the pinned comment below. But Walmart, it's one of my best performing positions in my entire portfolio from a capital appreciation standpoint. And it started really growing after 2015. There are so many examples like this, but I had people write in, Ian, yeah, you bought Walmart in 2009 and you're sharing that example, but that was so long ago. But what I'm trying to say is, well, those first 6 years was really nothing. Yeah, the dividend was compounding a bit and I got a little capital appreciation, but it kind of went nowhere. And so my story with Walmart, where I made all my money in Walmart, it's really between 2015 and now, which is really only about 9 or 10 years. And so that is kind of just the cycle of investing, and another example of how it is being an investor where company growth, it's not always linear over time. And so will the market crash from here? Is the Home Depot a barometer for the market, for the economy? I don't know. I think we're overdue for a correction, and I don't know if that correction will turn into an all-out crash in the market, but I'm just kind of sitting around waiting. As I wait, I'm buying whatever I see right now that I believe is on value for me, and I'm just kind of waiting for better prices in other positions I have. The great thing about being a dividend investor with a portfolio is that any given time, at least 1 or 2 or 3 of those positions will be on sale. And so if you enjoyed the video today, please go ahead and click the like button and then immediately head down to the comments and please share. What do you think? Is the market crashing right now? Will these days of just seeing red tickers disappear? Or will we keep correcting, crashing even more? I'd love to know. And also share in the comments below if you own the Home Depot, what you think about the results. Were they lackluster to you? Did you have a similar conclusion that I did? I would love to hear. All right, everyone. Also, please don't forget to subscribe. Before I go today, in terms of a full disclosure, I own the stocks mentioned today. In terms of full disclosure, I am long the Home Depot, ticker HD. I am long Walmart, ticker WMT. I'm also long Coca-Cola, ticker KO. At some point, I'll probably add Equinix, EQIX, into my portfolio. In terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey for fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. It's possible to lose money in the stock market. I'm just sharing my journey for fun and entertainment. As always, I have additional disclosures, disclaimers in the video description below. Thank you for watching. I'll see you in the comments below, and I'll see you in the next dividend stock investing video.